Hello everybody. In this video we will be solving the Kaplan exam kit for the chapter inventory. Also, before watching this video, make sure that you have checked the exam kit solutions video, the second part, the previous part, because in that I have solved the first two questions of inventory and I have revised all the formulas of the inventory chapter. So make sure that you check that video, which is the part number 2 exam kit video. So watch that first and then you can watch this one, because I'm not going to revise the formulas in this video again. If you need any of the links, then you can check the description box below. I have linked all the playlists below. Also, if you haven't watched the chapter explanation video, I have also linked them in the description box. So we have to start with the question number 91. Okay. Apple buy and sells inventory during the month of August as follows. So this is the inventory of Apple buy. What is Apple buy? Apple buy is a particular company. Which of the following statements is true? Give me a second, I'm connecting my pen. Okay, let's start. Opening inventory. Apple buys and sells inventory during the month of August as follows. Opening inventory. So what are our opening inventory? Our opening inventories are basically 100 units and each costing 2.52 per unit. On 4th August, sales took place, purchase, sales, purchase, sales. So what are we supposed to identify in this question? Think about it. So when you are thinking about it, when you have to solve a question like this, how are you gonna do? You can just use FIFO method to do this, because it will become easy for you. So you have to see the solutions first and then you have to see which method you have to apply. So if you read the solution, FIFO method is being used and the periodic weighted average. So let us solve the same question using both the methods and then let us come to a consensus. Okay. So if I do the FIFO method, what happens? First tell me that. Also, the rules remain the same. Make sure that you have a register with you and a paper and a pencil and a calculator with you. You are supposed to solve the questions along with me, otherwise you will not be able to understand. So this is my date column and this is my name column and this is my number of units and this is my total. So this is the table which you make during the FIFO, right? So we have an opening stock which is given to us. That's what we saw in the question, that we have an opening stock. So we have an opening inventory, 100 units, 2.52 each. Okay. 100 units, 2.52 each. So what is 2.52 into 100? 2.52 into 100 will give me 252. So let us leave the total column for now. Moving on. On 4th August, sales took place of 20 units. Okay, let us write that. So on 4th August, sales took place of how many units? 20 units. Okay. So we are going to minus 20 over here because the sales took place. After that, on 8th August, we purchased 140 more. Okay. We purchased 140 more. Moving on 10th August, sales of 90 again. So we are having sales of 90 again. So here how much are left? 100 minus 20 is 80. We need to make a sale of 90. So from here we will minus 80. So my opening stock becomes 0. And the balance 10 I minus from here, so this becomes 130. No doubt, that's what we used to do in the first in and first out. 18th August, there has been a purchase of 200. Okay. 18th August, again there's been a purchase of how much? Go back to the question and see of 200. Fine then. The last part, we have a sale on 20th August of 180. So let us write that also. 180. Okay. So out of, we have to make a sale of 180. So from here we make a sale of 130. So this becomes 0. What is 180 minus 130? 50. So from here we minus 50. So what are we left with? We are left with 150. So how much closing stock are we actually left with? We are left with just 150. That is what we do using the first in and first out method, right? Now how do you find the closing stock? Think about it for a second. I hope you have solved the question along with me so far and you are finding the answer. Give me a second. Yeah. Okay. So how do you find the closing stock? So in 20th August you have 180. Right. Before that you have the purchase. What was the last purchase? When did the last purchase take place? The last purchase took place on 18 August. So you have 2.78. Right. That was the last purchase. So 150 multiplied by 2.78. How much will that give? 417. So 417 is my closing inventory. Clear so far? I hope you don't have any doubt. Now let us do the same question using the periodic method. You remember what periodic method was? Total amount of purchases divided by total number of units, right? This was the question. This was the formula. So how are you gonna find this? What is the total amount of purchase? Okay, before that let us find out what is the total number of unit. Giving you a second try to find that. We just have to find the total number of units in purchases. Okay. So whenever we are talking about total purchases or total number of purchases, we will always be including the opening inventory also. So I hope you know that. So total number of units will be 100 plus 140 plus 200. So that will give me 440. Okay. Now let's talk about total amount. How do you find out total amount? Okay. So you are basically going to multiply with the price and find the total amount. I hope that is okay. So what is 100 multiplied by 252? 2.52. It's 252. What is 140 multiplied by 2.56? 140 multiplied by 2.56. 358.4. What is 200 multiplied by 2.78? 556, right? Now try adding it. 556 plus 358.4 plus 252. This will give me 1166.4. Okay, so 1166.4. So now if we divide this, we will be getting 2.65. Okay, so if you recall, what did you get by using the periodic method? You get the cost per unit. So your cost per unit is $2.65. Now you have to multiply it with the pending number of stocks to get the closing inventory. How much were pending? 150 were pending, right? You got that? So 2.65, 160. Was it 160 or 150? So we had 150 left in the closing stock. 150. So let us multiply this 397.63. So this is my closing stock using the periodic average method. Okay, so here we have 397.63, and when we solved using FIFO we had 417. So what does this mean? This means that FIFO is more than the periodic average cost, right? That's what it is saying. So my answer is going to be A. Closing inventory is higher when using the FIFO instead of the periodic weighted average. 92. David performs an inventory count on 30 December 2006 ahead of the 31st December year end. He counts 1,1200 identical units, each costing $50. On 31st December, David sold 20 of the units for 48 each. What figure should be included in David's financial position? So basically you are supposed to find David's closing inventory. Okay, so how are we going to do that? Think about it carefully. So David has 200 identical units. Okay, out of this he sold 20. So how much is he left with? He's left with just 180 units. Okay, these are the number of units which are left with him. Now tell me, David sold for 48 each, and each of which cost 50. So which one is lower, 48 or 50? 48 is lower, right? So what was our rule? It used to state, the conservatism rule used to state that the net realizable value or the cost value, whichever is lower, we will always take them into account. So here 48 is lower, and these are the number of units which are left in the inventory, right? So 1180 multiplied by 48 will give you the value of the closing inventory. So my answer is 56640. Again, I'm repeating, if you have any doubts, if you're not understanding any particular question, then please check out the description box below and first go and watch the chapter explanation video. After watching that, then you can come back to this video. Identify whether the following are true or false. Inventory should be valued at the lower of cost or net realizable value cost and replacement cost. This is false, because inventory should be valued at the lower of cost, net realizable value and replacement cost. We are never talking about replacement cost. When valuing work in progress, material costs, labor costs and variable and fixed must be included too. Inventory items can be valued either using FIFO or weighted average cost. Any entity's financial statements must disclose the accounting policies used to measure. True. Kiara's interior design business received a delivery of a fabric on 39 June 2006 and was included in the inventory on 30 June 2006. As of 30 June 2006, the invoice for the fabric has not been accounted for. So this invoice was not accounted, which means my profit must have been overstated, because I haven't shown that this invoice I have paid. That has not been shown. So obviously that is something which has been dismissed from the statement, which means my profit must be actually lesser than what it really is, right? So what am I gonna do in this situation? Profit for the year ended will be overstated. Okay. Why am I saying that inventory overstated or inventory understated will not be an option? If you read the question, it has been clearly mentioned that it was included in the inventory, only the invoice wasn't included. So inventory, there has been no problem, everything is okay, but there had been a problem in the P&L that we had to figure out. So my answer is C. Okay, just a second, guys. Profit for the year 2007. No, we are talking about 2006. So this has nothing to do with 2007, right? We are talking about 2006. So that is why I'm saying that you need to read the options carefully. There has been nothing mentioned about 2007 in the question, but in the option we have 2007, and I did not read it. It is 2006. The question has always been about 2006 only. So my answer is C, which is 1 only. What journal entry is required to record goods taken from inventory by a owner of a business? So when an owner takes the goods from the inventory, it is known as drawings. We know that, right? And we know that when you take a drawings, it reduces from the purchases, and we know that drawing is an expense. All expenses are debited, so debit drawings, and whatever we have purchased, purchases will reduce because it's basically like owner took it, so credit purchases, right? Because purchases are reducing. So question number 95, my answer is A. A business had an opening inventory of 1,80,000 and a closing inventory of 220,000 in its financial statements ending 2005. Which of the following entries are required to opening and closing inventory? Okay. So we have to basically tell them about the opening and the closing inventory. What was the journal entry? We have discussed this in the previous video as well. So what was the journal entry for opening inventory? Opening inventory is something which has to be removed from the assets this year, right? So if I'm reducing the assets, I will credit it, right? That is what I do. And debit statement of P&L, which is opening inventory in cost of sales. So this is my opening inventory entry, and what is my closing inventory entry? So closing inventory adds to my assets, and my assets increase. So debit inventory assets and credit statement of P&L. So where is this matching? My answer is B. This is what I have discussed. Ajay's annual inventory count took place on 7 July 2006. The inventory value on this date was 38,950. During the period of this to this, the following took place. Sales, purchase. The markup is 25% on cost. What is Ajay's valuation? Okay. So Ajay's annual inventory count took place and the inventory value was 38,950 on basically 7 July 2006. Okay. So we have sales with us, we have purchases with us, and this is the markup cost. So opening stock plus purchases minus closing stock. What will that give you? Cost of sales, right? Sorry, opening stock plus net purchases minus closing stock will give me cost of sales. Now tell me, what was the formula for closing stock? So closing stock, just a second, opening stock minus sales plus purchases will give me the closing stock, right? So you just have to basically use this formula and find the answer. I hope you can do it by yourself. Okay, now let's do 98. 98 is a lengthy question and it is extremely important.